Hi everyone, this is the second video in my free educational series. This one's entitled Support and Resistance. Okay, what I'm going to cover in this video is defining what support and resistance is, how it differs to supply and demand, and combining support and resistance and supply and demand together. Okay, now it's a common perception that supply and demand is the same as support and resistance, i.e. they are both interchangeable terms. But the fact is they're not, okay, and this is a very poorly understood concept, especially on public forums and in the retail space, okay. The two are very often interlinked as the same thing, but they are not, okay. So supply and demand zones are where the origin of the supply-demand imbalance occurred, okay, i.e. it's where the large institutional orders are stacked, okay. Support and resistance zones are significant price pivot points where the market has rejected price multiple times before. Okay, a support resistance zone is generally made up of at least two, commonly three, price rejection points in the past, whereas a supply and demand zone is not related to the number of times it has occurred in the past. Okay, for example, a fresh supply and demand zone or a turning point is of course the first time we've seen a change in direction. Okay, yeah, if I'm referring to a turning point, it's the first time we've seen a change in direction of the supply-demand imbalance at this particular swing high or low, okay? For this then to be considered a support and resistance zone, we would need price to return to this supply-demand zone and be met with more of the same imbalance again and reject price again, okay? And that would be the second, that would be like a double top or double bottom in the second rejection point, and that would be where we would draw support and resistance, okay? So you can see this on the chart. Okay, so this is a supply-demand turning point and zone. We see it's a swing high. Okay, so this is what we call supply and demand imbalance coming out of this. Okay, but we wouldn't call this a resistance. Okay, we need at least 2 points, 2 rejection points for the be able to call this a resistance zone. Okay, so when price comes back, it's met with more supply again, forms a double top pattern, and now we can say this is a resistance zone. Okay. So you should be able to see the differences here. Okay, we can't call this a resistance zone because it's only had one rejection. Okay, but we can call it a supply and demand zone. Okay, so the important points to note are an SR zone can also be an SD zone. Okay, but an SD zone does not have to be an SR zone. Okay, so this is a resistance zone. We've got two. I mean, it's also a supply zone. Okay, this is a supply zone, but it's not an SR zone. Okay, a support resistance zone is the average zone where the market has rejected price in the past. Okay, whereas an SD zone pinpoints the exact origin of the SD imbalance within this SR zone, and that could be different at different touches of a resistance zone. Okay. It is important you spend some time understanding that. Okay, so it is sometimes hard for people to understand that concept, especially people that have gained vast amount of their knowledge from public forums, where teaching of price action trading is generally very poor, and you're trying to relearn things that have been drummed into you one way, relearning them another way. Okay, but it's a very important point to note that the differences between a support resistance zone and a supply and demand zone. Okay, so now if I move on to how to potentially combine these together. Okay, a support resistance zone is very helpful in pinpointing areas where the market is rejecting price. Okay, one of the first things I do when I look at my charts is I'm looking to identify support resistance zones. They are very clear and obvious on a chart, and they're, for this reason, that they are obvious areas to be looking for supply and demand zones. Okay, because they are prove themselves to be areas where market rejects price. Okay, so we can use our knowledge of SD zones to pinpoint where the exact decision was made to react at an SR zone. Okay, because institutional orders are stacked at SD zones, and an SR zone is made up of a collection is a collection of multiple SD zones. i.e. they are clear periods of historical supply demand imbalances. They are great areas to be looking for trade opportunities. Okay. Now this example shows the market where the market has rejected price, causing SR zones and then transition from acting as resistance and then support following a breakout, okay? And that's something called an SR pivot zone, okay? An SR pivot zone is something that was acted as both support and resistance, okay? So we can see here we have a resistance, we have the breakout, comes back for the immediate retest, acts as support, okay? This is an SR pivot. Same here, we have a resistance, we have the breakout, and now it comes back and acts as support, okay? A pivot zone. And it keeps doing this, breaks out of this one, it comes back and acts as support, okay? And so on and so on, okay? But these are the clear SR zones and SR pivot zones on this chart, okay? And this is a 1 hour time frame chart, okay? Okay, so we can go one step further now. We can clearly see that the SR zones represent the areas where the market has rejected price, okay, i.e. where an SD imbalance has occurred. But we can go one step further and zoom in to assess where the exact SD zone within the SR zone, okay? So if I go on to the next chart, this is a 15-minute chart, 15-minute time frame chart focusing on the lowest SR zone from the previous chart, okay? So now we are pinpointing with more accuracy the first consolidation zone which led to the SD imbalance, okay? So we can clearly here see we have a very large SD imbalance arising out of this zone, okay, and this is the SR zone, okay? Okay, so finally if we zoom in even further, okay, this is the 15-minute time frame. If we zoom into the 1-minute time frame, we can pinpoint the exact SD zone to an even smaller consolidation zone. Okay, so if I'm zooming in to this zone here, this is the 1-minute time frame. The previous chart was a 15-minute time frame. Okay, we can see that this is the source. This is the fresh SD zone. Okay, this is the fresh supply zone. Okay, within the higher time frame, the 1 hour time frame SR zone. So we can pinpoint now within, this is a 1-minute time frame, so this is going to be 5-6 pips. Whereas on an hour time frame, you wouldn't be able to pinpoint it with this such a degree of accuracy. Okay. So it should be clear that being able to pinpoint the exact origin of supply-demand imbalances within SR zones, ignore my incorrect spelling of supply, is going to provide us with some great trading opportunities when we look at SR zones, when we look at the exact origin of the SD imbalance. That's going to provide us with some very good trading opportunities when we come to developing trading strategies around SR zones and SD zones. Okay, this is only a very short video. The next video I'm just going to talk through examples of finding where the decision was made to break out of an SR zone by using SD imbalances. I'm going to go through a number of examples, but this one's just talking through the theory of making sure you understand the differences between supply and demand and support and resistance, and first stepping into looking into where how you can use SD zones within SR zones to pinpoint the exact turning points and breakout points. Okay, so it was a great task for you to go and do that yourself in your own charts, identify SR zones and zoom in to find the origin of the fresh SD imbalances. Okay, where was a breakout occurred? Where did the retrace occur? And look how price reacts around it. You learn a lot by looking over your charts yourselves. It's certainly the best way to learn how to trade and develop trading strategies, but just is by chart watching. Okay, guys, hope that was useful. See you back for the next video.